As usual, all the news is out this week in anticipation of the Fed next week. So, you know what? The rain has stopped. Can you see clearly now that the rain is gone?
I can see clearly now the rain is gone. I can see all obstacles in my way.
Yes. I can see clearly now that the rain is gone. Listen, hey, it's Steve. It's another Friday. And guess what? It's going to be Father's Day on Sunday. So I want to wish all the fathers out there a happy Father's Day. You know, you've got some folks that are going to be fathers for the first time and they're not there yet. But you know what a great miracle that's going to be for you next year. You know, oddly enough, I'm going to be a grandfather for the first time, and we think it's going to be around the end of September. Obviously, not sure, but many of you know that my son Nick died uh, January 31st of last year from cancer. Well, by the grace of God and the miracle of technology, Katie, his wife, is going to have his baby in September, a year and a half after his death. Can you believe that? I mean, it's just awesome. Little Hayes will be here sometime in September. So, listen, don't have any questions this week from you. A lot of them were the same ones we always answer. Is it time to refinance? Yes. And you got to call me to talk to me about it. It's pretty critical that you do that because you know what, guys, I know better. I see all these new cars driving around. I see all these deals these car dealers are doing. You guys are buying them. You guys got 13, 14, 15, $2,500 a month in debt, whatever. Let's take a look at it. The other questions that came up about construction or perm, though, you got to call me directly on that. Renovation loans, you have to call me directly because I need to know the circumstances. So we're starting to see some encouraging signs on the inflation front. It's beginning to tame a bit. And that's got a lot of people talking about what the Fed might do next. Now, the Federal Reserve is going to wrap up its 2-day policy meeting next week. And while nothing's set in stone, many analysts are speculating that they may keep rates flat through September. Now, as we've told you all along, while we thought rates were going to come down by now we're pushing it off about another 12 months because of all the economic data out there. But what we're seeing is signs of other things reducing: gas, food prices, different things like that that can be as much inflationary as mortgage interest rates. So listen, there's even talk about a one or two more Fed rate cuts by the end of the year, which plays into our plan for next year in rates dropping. Now, of course, let me be clear. Excuse me, that's all speculation now. And the Fed is being very cautious, and rightly so. Their dual mandate is to maintain stable prices and maximum employment. So they're watching that data closely. Now, home price trends. Let's talk about that for a second. Let me just pivot over to housing because this is where things get interesting. Home prices, they continue to rise year over year, right? We're seeing some consistent seasonal trends right now. According to the latest Case Shiller data, prices tend to trend or rise faster during the spring months, then slow down a little bit later in the year. Now, here's one of the key takeaways I've noticed is that even if you bought a house in the peak, like for example, the month of June, or home values started to stagnate, you're still 12 months later higher. So, yes, timing can matter, but long term appreciation still works in your favor. Now, I keep on telling you, buy the house, buy the house. If you're looking for that sweet spot, you missed it. It's usually March to April because historically they offer a great window to maximize future appreciation. Now, that early spring purchase tends to capture the strongest market because people want to get into their house before the summer, and it gives buyers a head start on building wealth. Now, as the market starts to trend a little slower, we often see seller incentives. For example, sellers are paying closing costs. They don't want prices to slide, so they'll offer closing costs. So, shifting gears now, let's talk about global news because we don't talk about that a lot. But after 2 days of negotiations, trade negotiations in London, the U.S. and China have finally reached a framework for implementing the trade truce. Guys, that gives the markets a boost, or gave the markets a boost. But more importantly, remember me telling you, don't listen to the headlines, read the story. Remember, it was all about Trump against China, China against Trump, whatever. They come together, and it's for the better of the country. However, now what we did see was some volatility that excuse me, after President Trump announced the possibility of imposing tariffs on other trading partners as well. Now, what I mean by that is that in the next 2 weeks, some of the other countries, they may get hit with some trading tariffs that they're not expecting. And, maybe that's going to better our country. So stay tuned because global developments can still shift the market sentiment. Not likely, but they can still shift. So last night, we saw Israel bomb Iran. And I know everybody's like, oh no, oil prices are going to go up. They're going to skyrocket. Well, no, they've come down a lot. I mean, I just paid $2.68 at the pump the other day for regular gas. I haven't paid that in I don't remember how long. Well, here's what we saw. They were very specific with their bombing. They only bombed nuclear targets. They didn't bomb housing. They didn't bomb any oil facilities. They just bombed specific targets. Here's the interesting part. I was watching the news this morning, and it turns out around the world, Iranians are applauding Israel because they don't recognize the current regime that's running Iran right now. So, far more reason for us to support Israel in this. Now, I'm not in the know. I'm a mortgage guy. I'm just regurgitating news. But you know what? I like what I'm hearing. Now, back at home, the inflation numbers for May came in softer than expected, both at the consumer and the wholesale levels. That's definitely welcome news. I know you know that, but we have to be cautious because the full impact of the tariffs likely won't be reflected in any of the recent numbers that are starting to come out. Jobless claims, they're creeping up. Last week, we saw new claims hit their highest level since October, and claims are now above 1.9 million. Remember a week ago when I did this, and I was like, wait a minute, we got to see the revising numbers. Well, here they are. They went from 400 something thousand to 1.9 million. That's a big gap. Well, that's the largest since 2021. That's a sign that the labor market might be losing steam. But with all this drill baby drill and all this new steel stuff that's coming to the country or coming back to the country, new auto plants, all these different plants that are getting ready to open within the next, 12 to 18 months, we should see a steady stream of jobs. What does all this mean? Even with the economic certainty, guys, softer inflation and the Fed likely holding steady, all this continues to support one thing. What's that? The housing market. If you're in the market, focus on the long game. Like I've told you, buy the house, not the rate. Rates can change and likely will, but the opportunity to build equity and wealth along the way starts with what? Owning a home. Now, listen, guys, I'm your favorite mortgage guy. I need you to call me. It's been a little slow. Could use some referrals. Been really slow. Could use a lot of referrals. So if you need me, you got all my contact information down here. Along the sides here, you got all my other information. My song, you heard about that last week. Getting ready to finish it. It's coming out pretty good, and I'm going to do another one. So I hope you guys have a phenomenal day, and I will see you next week. Happy Father's Day.